So how much about that? I just started a broadcast and then I realized when I was done that I somehow stopped it again right after starting it. This is Axel Merk, President Chief Investment Officer of Merk Investments with my morning update. And so let me repeat what I said to myself here to everybody. We have a risk-on environment and bonds are off today, a little bit at least, 10 years off 7 ticks as I speak. The 30-year bonds is off 24 ticks. 3-month LIBOR is at 110. I've been mentioning 3-month LIBOR because that's the intrabank lending rate, and it's relevant because the 3-month Treasury yield is at 8 basis points. And so that's obviously a big difference, and there's still some tension in the markets. The Fed funds rate, the effective rate, is at 4 basis points. It has been hovering at 5 basis points. The dollar is weaker today, at least much of it. The strongest currency today in the G10 is the Australian dollar. The NOK, the Norwegian krone, is the weakest, down currently 85 basis points, and that's despite oil behaving more normally, if you can call that normal. The June delivery for Cushing's is at $14 right now, up about 240, up 20% for the day. And it's a good time to mention some disclosure. Let me put that up. None of the securities, or in this case, commodities I mentioned as investment advice. I trust you all understand it, but I want to make sure that you get to see this disclosure. Now, let's talk briefly about this Australian dollar being the strongest. That's on the backdrop, some people might say, of the record retail sales in Australia. And some people have said, wow, they're bouncing back already. Not so fast. I mean, this is not exactly what's happening here. Yes, Australian retail sales came out overnight and were the strongest growth on record, but that is not because of a recovery. This is because of hoarding, of panic buying heading into the shelter in place, and it may prevent them from going into recession in the first quarter based on the statistics. But this doesn't really tell us anything about the future. If anything, there was too much buy ahead of time. The Australian dollar being up, well, some that I hear say this is due to short covering. Remember, it wasn't exactly the best of days for commodities yesterday's. And so take it with a grain of salt when you hear any interpretation of the news, including my interpretation. Just trying to make sense of the markets here. Similarly, the NOK is lagging despite what we see. But talking about taking things with a grain of salt, let me veer into the field of politics here, and bear with me if you disagree with what I'm about to say. But I'm going to talk about the Trump executive order, that pending one about halting immigration for 60 days. That is a bunch of political fire that is pure politics and has really quite little to do with the practical impact on immigration. And so if you favor a hold on immigration, just bear with me here. If I understand this correctly, when you hold the green card visas, green cards and citizenships, what you're essentially doing, you're halting a phase in the immigration process that is, for most people, very late in the process. Those are people who are working. If you're on an H-1B visa and converted to a green card, you might get a delay. You're still going to be working. And so the main thing this is going to do is it's going to clog up the system at the end of the 60 days when things open up again. Now, obviously, there's already a clogging up because consulates around the world are in emergency mode, and they're not processing most things right now anyway. But it's going to clog up the system more. So that's what's going to do. So in that sense, it's going to delay things. Another group that's affected by that is an American marrying a foreigner. The marriage is still going to take place or has taken place, and that person is going to be integrated in the U.S. workforce anyway. And there's just a huge inconvenience that's going to be applied because often these couples have to be separated. You have to go abroad for kind of to finish up the paperwork. And so from an economic economic impact, you can really, I think, shrug it off. Politically, it makes all the sense in the world if your name is Trump, because if you're a Democrat, you're going to go and say, hey, this is horrible, and say that you are pro-immigration, and that's exactly what Trump wants, to kind of put a wedge in there and to have more people come to him and have that topic be in the news. Now, I do touch on these topics not to be political or to vent my own views, but because it is always important to see whether there is an economic impact on these things. And so, in that vein, let me touch on another aspect. Bill de Blasio holds a daily news conference in the morning, and today he talked very clearly about testing and tracing. And in order to open up New York City again, you've got to do a massive ramp up in testing and massive ramp up in tracing. I am stunned that we don't hear more of that. In most places, we hear about, yep, we'll open up again, and there's some basic ground rules, and yes, you've got to wear a mask in the shop. And of course, it depends, of course, on the culture. As many of you know, I listen to news around the world, and if you go to a school in Germany, you can now go back if you're in the senior year and take your last exams, and there are meticulous rules on how to use the bathroom even, and things like that. And if you're over 60, you don't have to return as a teacher and so forth. And so, very German style, very precise. I'm not suggesting that one approach is necessarily better than the other one. It's just culturally that there are going to be different approaches, and we'll get a huge sample to see which ones are going to be more effective. But back to the New York City proposal on the contact tracing. Apple and Google had announced a little while ago that they're working on an app to allow just that on a voluntary basis with lots of privacy protections, and obviously privacy critics will question that, but voluntary. Now, I have no idea how the New York City approach is exactly going to be implemented, but I'm amazed that we don't have a national debate about how to best go about that, and more importantly, that people seem to be quite laissez-faire, and how we going to open it up somehow. Some people send as a reminder that the Spanish flu killed millions in the second wave, not in the first wave. Now, clearly, the situation was very different, but it may well be worthwhile to spend a little bit of time to think about it. I've argued for a while we should be spending $1 trillion on trying to reopen the economy, and with that I meant precisely figuring out how to do this in a way that's safe going forward, and including, obviously, vaccination and testing, whereas if I go jogging here locally, I'm based in Palo Alto, California. At Stanford, there's a huge testing facility that's been built on a parking lot. It's empty. I usually go there in the afternoon, but I certainly go there often. I work East Coast hours, so I often go running at 4 in the afternoon Pacific time, which is 7 Eastern time. And so I think I deserve to be off my desk by then. I don't always get off my desk at that time, but at that time it's empty. And so it's I don't walk into these tents there. Obviously, I jog by, but there's not a lineup of cars or anything like that. And so it appears that in the Bay Area, at least here, you still need a doctor's referral to get testing. It's still complicated. North of here, near Sacramento, there are radio ads that you should not get tested unless you're vulnerable. So we're still in that early phase where testing doesn't appear to be widely spread, and it's not part of the solution as much as it should be, in my view at least. And so this is going to be very interesting. Now, in the meantime, markets are rallying again, and everybody's happy and looking at the markets, and when the glass is half full, we'll see how this unfolds. We continue to have various oddities in the markets. I mentioned the 3-month labor rate to be on the high side here. Let me mention one other thing, going back to kind of my in between the line readings. So we are faced with consumers that are shell shocked right now. I mentioned the Australian consumer record sales that was ahead of the shutdown. When we come out, obviously there's going to be some pent-up demand, but the question is, will we go back to pre-crisis spending? If you are elderly, retired, the elderly make up about 20% of consumer spending in the U.S. Are you going to take that cruise that you wanted to take ahead of the crisis? Some will, Most will probably not, is my guess. For sporting events, are you going to go to that next football game? On social media recently, there was shouting of, hell no, I'm not going to go until I'm vaccinated. Now, some of those comments almost certainly were motivated by President Trump saying stadiums will be full again, and so in natural fashion, people push against that because they just don't like the president. But on a serious note, I would think, yes, a lot of people will think twice before going back to the stadium. Some will think, oh, no problem, of course I'll go, but at least some will not. Or let's take business trips. I'm scheduled to be at a board meeting in June where I normally take a flight and stay in a hotel. Obviously, spend money, right? It looks like travel will be okay, will be permissible, and maybe I will go, but I would think many others in my situation will choose not to go. And so there's going to be less of that. Habits change. Later today, I have what used to be a conference call, and whenever it took place, I got a meeting invite for a conference call. Well, this time around, I got a meeting invite for a Zoom meeting. I don't know. I don't need to see these people, but that's the new thing. We do Zoom meetings, and so that means there's less in-person. In-person meetings will still be important, but are they as important as they were before? We had a discussion. Hey, should we give up a car that we have? Do we really need it? And obviously, our minds may change once the economy is open again. But I am sure those discussions happen in other households again, especially in households that have been bruised severely, right? And so we will be faced, in my view, with and then of course jobs are not going to come back for everybody, right? Businesses will run lean operations until their revenues come back, and even when they're back, they have to repair the balance sheet. They might try to work with few employees. The reason why we didn't have as many layoffs, at least that's my interpretation, a year ago when the tariffs were announced, because we were in the exact opposite situation. We had a hot economy, and you were afraid, you knew that the trade war impacted your business, but you were afraid of laying off your people because you didn't know whether you could hire them back, because you didn't know what the trade policy will change with the next tweet again. And so now you're in a situation where you'd rather be cautious, and that's going to be there for a while. Now, that's the consumer side. The other end of the spectrum is fiscal and monetary policy. Congress just announced another couple $100 billion in aid for small business. There's talk about infrastructure spending. Needless to say, both Republicans and Democrats and politicians around the globe appear to be very willing to write checks right now. So we're going to have an expansionary fiscal policy. And then we got monetary policy. Well, Powell has already promised that he will be slow and gradual if and when he has to take that monetary accommodation away. And so let's take these together. We are propping up businesses. In a normal world, we would have had a complete collapse of overly extended businesses, and instead, and obviously I think there's a good reason why we policymakers didn't allow that collapse to happen, but the fact still is we are fostering an oversupply of goods. Now, clearly, and oil here is a good example. Now, oil, of course, has many special, unique situations with the limited storage capacity and whatnot, but still, big oil has had access to has benefited from the Fed's actions, and who knows, maybe some small fracking company has had access to the small business program, and yes, they're trying to kind of take production down, but it just visualizes the sort of issues that I think do happen everywhere, where we have the capacity to produce many more gadgets and widgets, and that excess capacity will be around. And so some people may well be tempted to produce those gadgets and widgets and services and whatnot, which means we have an oversupply of, and by the way, historically, looking at capacity utilization is a great indicator to look at whether we are at an end of a recession. Capacity utilization usually plunges in a recession, and then when it rebounds, we are out of the recession. And of course, in order to be out of a recession, you just need a positive print. You don't need to go back to the previous level of economic growth to be considered to be at the end of a recession. Relevant because usually in downturns, the stock market does poorest when we are in a recession. In any case, we're going to have an overproduction overproduction, which means prices of goods are going to be low. And so now some people say, oh, this is deflation. No, it is not deflation. Deflation is when we have that implosion, when you have a deflationary spiral, when things are grinding to a halt. We have prices coming lower on the backdrop of fiscal and monetary policy, putting the pedal to the metal, so to speak. And what I'm afraid of is that, well, wait a second. The Fed is going to see low prices, so why not double down on the policies and be even more expansionary on policy? And so exacerbating the very issues. Now, obviously, underneath you can then have the economy heal, and at some point something's going to kick into gear. But if you think there's going to be a free lunch here, I have my doubts. There are going to be unintended consequences, and as such, what we see in crude is the canary in the coal mine. Again, the situation is very different, but it's always different. When you have a crisis, it's unique, it's company specific, it's oil specific, right? And then you're going to have the ripple effects. And so I think we're only starting to learn what the unintended consequences are of this massive policy response that we see around the globe. And I don't think it would hurt to actually think about that a little bit more. I don't know how this is going to play out precisely. I have my ideas, and I don't want to give investment advice here. But I think we could be up for a surprise. If nothing else, it's the risks are high that those so-called anchored inflation expectations could become the anchor. This doesn't mean I'm suggesting there's hyperinflation coming tomorrow, but I think that we could overshoot on the downside and overshoot on the upside. And the entire thing about kind of having a slow and steady approach to things we could be all mixed up a little bit. Anyway, so this was my second try of doing this morning broadcast. Hope this came across. Give me your comments, give me your feedback, and stay safe out there, and talk to you soon. Bye.